Today, we're talking about an ETF that has been getting a lot of attention lately. It's called WPAY, and a lot of investors have been curious about what makes it different, why people are talking about it, and why it seems to be rising fast in the ETF world. So today, I'm breaking it all down in a simple way. No complicated terms, no heavy analysis, just a clear explanation of what makes WPAY stand out and why investors are watching it so closely right now. Let's start with the basics. WPAY is an ETF launched by Roundhill. If you've been following the ETF space for a while, especially the high yield and high interest niche, then you know Roundhill has been releasing some interesting products lately. It is one of their most talked about launches because it represents a completely different approach compared to most regular ETF. The idea behind WPAY is simple. Instead of buying individual single stock ETF one by one, it bundles all of them together into one fund. So instead of holding a bunch of separate tickers and managing them on your own, WPAY wraps the whole idea into a single investment. This makes it super convenient for anyone who wants exposure to multiple high-profile names without keeping track of many separate positions. One of the biggest reasons WPAY stands out is its weekly distribution structure. Most ETF pay out monthly, quarterly, or even yearly. But WPAY aims to do something different by offering more frequent distributions. That weekly aspect is exactly what's drawing so many people to look at it. Whether you like income or you just enjoy seeing activity in your portfolio, the WPAY feels very active and engaging. But here's the part that makes things even more interesting. The ETF doesn't just hold one type of stock or rely on one trend. It spreads its exposure across a whole group of single stock ETF. That means it's not tied to the performance of just one company. If one stock has a rough week, the impact is softened because the ETF is diversified across multiple holdings. That built-in spreading of risk is a big deal, and a huge reason why people are more comfortable looking at WPAY compared to betting everything on a single company. Another thing investors like is the rebalancing structure. Instead of letting anyone holding dominate the fund, WPAY balances things at regular intervals. That way, it doesn't become too dependent on one company or one trend. The idea is to keep things in check automatically, which makes the fund feel more controlled and stable in its own way. Now, that doesn't mean WPIE is a calm, slow, predictable ETF. Not at all. It's actually very active. The underlying ETF inside it tend to be tied to fast-moving companies or trends. Because of that, WPAY itself moves quickly. It's more toward the speculative side of investing. It's not the kind of ETF you hold expecting a smooth journey. It has ups and downs, and anyone considering it should definitely be aware of that. But that's also the appeal. WPAY gives investors a different kind of experience. Instead of the usual broad market approach where everything is steady and slow, WPAY mixes growth, income, and activity all in one place. Some people like that trade-off, especially those who enjoy more excitement in their portfolio. Another reason WPAY stands out is simply because it's new. Whenever a new ETF launches, especially one with a unique idea, it naturally gets extra attention. People want to see how it performs, whether it holds up, and what kind of traction it gains. WPAY is still young, so we don't have years of history behind it. But sometimes investors enjoy that. They like being early. They like exploring new products before everyone else catches on. But the flip side is also true. Because WPAY is new, there's uncertainty. We don't know yet how it will behave in different market conditions. We don't know how stable the distributions will be over time. We don't know how it reacts during long periods of volatility. That's just part of the deal with newer ETF. Another thing that makes WPAY stand out is the type of investor it attracts. This isn't really a safe and slow ETF. It's designed for people who enjoy a little more action. It's made for investors who don't mind movement, don't mind taking on some risk, and want something that feels more active than the usual index fund. If someone is extremely conservative, WPAY might not be their style. But if someone likes a blend of excitement, potential upside, and the idea of frequent distributions, then WPAY becomes a lot more interesting. This is also why WPAY has gained so much attention online. In a space where people are constantly looking for unique ETF that stand out from the usual list, WPAY hits the perfect spot. It's different, it's active, it's engaging, and it comes from a company that has been innovating a lot in the ETF world recently. That combination alone makes people curious. What I also like about WPAY is how it simplifies something that could be very complicated. Normally, if you wanted exposure to all those single stock ETF individually, you'd have to manage a bunch of tickers, rebalance them yourself, track them one by one, and keep up with all their movements. With WPAY, the fund handles all of that for you. You just buy one ticker, and you automatically get exposure to the whole group. For a lot of people, that's a huge convenience factor. At the same time, WPAY also gives investors flexibility. You can use it as a small satellite position in your portfolio. You can use it as a way to experiment with high-activity ETF without going all in on one company. You can use it as a weekly distribution play if that kind of structure appeals to you. There are many ways to fit it into a strategy depending on your risk level and what you're looking for. But, and here's the honest part, WPAY still has risk. Because of how the underlying ETFs work, the movements can be quick. There can be big swings. It's not guaranteed to provide stable growth or consistent distributions. So anyone considering it should definitely understand the trade-offs. The potential is there, but so is the volatility. And of course, WPAY is still very early in its life. Some investors love new ETF, others prefer to wait and watch. There's no right or wrong approach, it just depends on the type of investor you are. For me, what makes WPAY stand out is the combination of weekly activity, broad exposure, and diversification across multiple single stock trends. It's like a more organized, more balanced way of exploring higher energy ETF without putting all your bets on a single company. So overall, WPAY is different. It's bold, it's new, and it's designed in a way that makes people curious. If you're the kind of investor who likes innovation, likes new ideas, and enjoys keeping your portfolio active, then WPAY is definitely a fund worth watching. And that wraps up today's breakdown of the WPAY ETF. If you found this helpful, make sure to like the video, subscribe to Money Stick Unfiltered, and turn on notifications so you don't miss the next one. And tell me in the comments, what do you think about WPAY? Is it something you're interested in, or do you prefer sticking to more traditional ETFs? I'd love to hear your thoughts. Thanks for watching, and I'll see you in the next video.